Wheat goes to the lowest levels since the war started. We are going to discuss all the EPA changes right here with Jerry Gidel on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, how are you today? I think we should start by the market moves. And I think the most important thing right now is that wheat has reached the lowest price levels since before the war.
Yes, it is pretty amazing that we're back to these price levels. Wheat has definitely not been the investing community's darling, to say the least here. Ever since the Black Sea is back, opened back up, we did have a little pop here during the fall, and that, but going into the negotiations on the extension of the food corridor, and that can't really say that we've had a lot of positive news in the production side here. The U.S. side of the has a very difficult fall seeding period. Argentina's had some issues, big issues, on what their particular crop size is going to be. One positive has been Australia in this thing, where they look like they're going to have another sizable crop, even maybe back to last year's standards, and that. But the wheat market really was the short on many fund activity here, being long beans and corn. And at this point, the whole world has been somewhat on the defensive about wheat since the food quarter is back up, and with the extension we just had back here in November. The idea is it's going to be still having more supplies come out of that important region. So that's been the defensive. I'd have to say, though, that to some extent, the U.S. wheat crop still has a tremendous problem here with the very low ratings at this point going into winter. And there's indications that Argentina's estimate on wheat is even going to be lower than the basically 11 and a half to 13 million number that's coming out of there. USDA, by the way, is at 15. So there's a likelihood they're going to be down at least 2 to 3 million.
Yes, and what about the soybean market at this point?
Well, the soybean market really kind of helped started this latest couple days of break here, from the standpoint that the EPA had a mandate to put out their 2 to 3 year outlook here on the U.S. Biodiesel, renewable diesel, and also, of course, on ethanol production. And that came out on Thursday. It really set off quite a set of events here. Beans really took it in the chin that day, primarily because of the fact that there wasn't really a big projection about they put a demand in there in their numbers, but they didn't really project the kind of buildup that's going on here in the U.S. soybean crushing industry for the renewable diesel situation. That particular product, which is really highly, like 98% of that particular product to burn in trucks, is soybean oil directly. There's not a lot of other issues with it from there. So it's really been becoming a popular thing. It went from nowhere up to the same amount of output that biodiesel is, which is a slightly different product in that. And it looks like it's going to surpass it as we go forward here. That being said, that particular thing prompted the big setback on Thursday. Interestingly enough, we had our export sales that day, and the U.S. soybean exports were solid. They weren't spectacular. We're still above last year's paces, by the way. But on the that particular feature there, it turned into basically a technical liquidation from the funds that were long the beans because of the activity that we've had here with strong demand domestically, and also the outlook that there's going to be a big expansion here of soybean crush going forward. I'm not sure we're expecting a big changes in the USDA's numbers next week on the crop that we're looking at, but the further out months, further out years, I should say, should be very potentially different than what came out. So that started kind of the cascade down that we had here in wheat and corn yesterday.
Yes, and on the soybean side, I think all the eyes will turn to Brazil in the coming weeks for the crop development.
No doubt, no doubt. Definitely, it's been on and off rains in north of Paranón and Mato Grosso do Sul. It's been a little bit spotty in Mato Grosso, but it seems to have been kind of washed over because most of the areas were getting adequate enough rains, and we're getting actually one of the areas that still hasn't to be planted is Rio Grande do Sul, which you know all about from there. And so it turns up that in general, everybody's optimistic that there's going to be a big jump and the from the 126 of last year up into the 150s. People are even edging up towards 155. The USDA is at 152 million metric tons at this time. And interestingly enough, next week's numbers are going to be concentrated on the world numbers on production, since we don't have any U.S. numbers now until January. Any updates on our U.S. crop?
Yes, and what are you looking for next week?
Well, I think next week's numbers are, in general here, people are trying to anticipate the fact that the USDA seeing all these negative demand numbers out in front, and we're going to have these big adjustments in things at this point. I think they tend to, this time of year, particularly since they're going to have the big production numbers here in the U.S. changing in January, they don't tend to make a lot of demand changes at this point. The one that's probably hitting us in the face right now turns out to be corn. The corn number on exports here, we're really running like 55% of last year's numbers, and that's tough to overcome at this point. The big thing has been that China has not been a participant in the U.S. Sales here going forward. They seem to concentrate on the idea that they're going to get all this corn from Brazil. Thing is interesting is that they did send out a boat, by the way, the last week for them Chinese to test out their corn and that. But the biggest situation in Brazil is that they won't have any substantial amount of corn to send them until next summer. So it's an interesting twist here that the Chinese are trying to do a little diversionary move here, thinking they're going to buy a whole bunch of old crop. There isn't any old crop to be bought from there. So I'm anticipating the USDA to reduce its export sales by 100, and that'll take our carryover stock down. And I say, well, geez, on the domestic side, our actual numbers that we got here this last week, and they're so delayed, we're still dealing with September, by the way, in the ethanol output. It was actually higher than expected, but lower than last year. And so some people trying to throw around the idea that ethanol demand is going to be substantially down this coming year. No, I don't sense that. I think it's just that the people out there that are searching for corn, and that's all these ethanol plants in the Western Corn Belt, they've really had to pay some big bucks. Right now, a lot of the local elevator prices west of the Mississippi are higher than the futures, which is highly unusual. Sometimes that happens in June or July at the end of the year, not in fall. And so I think that's part of the reason that they're just kind of saying, okay, we'll get by, and we're not making as much money with these high prices, so we're going to sit back and wait a little bit and not go crazy on production in the short term. But the one thing that's kind of interesting that's out there, maybe medium to longer term, is that there is a big push from EPA and others about getting the 15% blend out there in the public's eye, and to some extent that really is because of the cost differential, and also it doesn't end up hurting anybody's gas mileage, despite the oil industry trying to tell you that it's all of a sudden you're going to lose 5 miles a gallon. You'll actually potentially go up anywhere from 1 to 2 because of the higher octane that's in that gasoline. So the corn market is the really one that we're going to be looking at next week. We still have the soybeans and the wheat markets. I'm not anticipating a lot of change in either one. The wheat, there's, we're slightly behind, but I think because of the problems that we have going here in the wheat market around the world, Argentina, our own, things like that. I don't know if the USDA is going to make any adjustments there in a big way on exports at this point. They are behind a year ago, but I'm not sure that's enough for them to make that adjustment. Soybeans always are an interesting one as to what might or might not happen there. We are still ahead of the export pace of a year ago on soybeans through this week here on actual sales, not by much. I think it was like 5 million bushels or 10 million, modest amount. But so the exports aren't there. And we had a very solid October crush statistic being released this week. And that just missed the highest level we've done in October, and actually above expectations. So I don't sense that that's going to be a one that they're going to adjust going forward. So as many times as we go into December here with modest expectations for changes, I think that'll continue to be the case again this time. We haven't seen the trade average guesses out yet, but I don't sense there's going to be a lot of adjustments here. If there is, I'm not sure the USDA is going to be as willing to make those changes until they actually see the final production in the U.S. and get more of a details on what's going on in South America.
All right, let's see. Thank you very much.
You bet. You have a good day, sir, and we will see what the USDA says next Friday.